Hi guys, welcome to our very first analysis episode on this YouTube channel. My name is Lawrence and I will be the one in charge of making videos on weekly analysis. In this video, I will be discussing the price action strategy used by us here and other Forex trading professionals. And yes, after this video, we will begin to drop videos of our weekly analysis on different currency pairs. We will be making these videos to tell you what to expect for the coming week on the pairs and how you should trade them. Before we start this video, I would like you to subscribe to this channel so you will be notified on when we drop a new analysis and you wouldn't miss out. So, hit that subscribe button and turn on post notification. So what we're going to be doing in this video is that we're going to be looking at key levels that you as a trader should watch out for. And we're going to be using TradingView to set alerts. And when a level is reached, you will get notified. Doing this will help you a lot so that you wouldn't have to be watching the charts all the time. Just set your level and when you get alerted, you can check the charts again. This trading technique is highly recommended because it will help you build a very good trading psychology. You wouldn't have to panic buy or panic sell. And yes, before I forget, we will need you all to get a pen and a paper or a note to note things down because every single information in this video is going to be really important. Now, let's get to the video. First thing to do when analyzing is you should list all your strategies. The strategy we use here at Forex Signals is the Ultimate 7, which includes 1. The Forex News Analysis, 2. Time frame analysis, 3. Support and resistance, 4. Trend lines, 5. Candlestick and chart pattern analysis, 6. Fibonacci, and 7. Indicators. When we analyze charts, the first thing we do is to check the news to know the pairs to avoid trading for that week, and you can check the news on forexfactory.com. The reason why we advise our students not to trade when there is a news occurring soon is so that they will not be affected by the news spikes. During news events, the big guys are going to be using this opportunity to manipulate the markets, and sometimes they pay news providers to send out fake news so that they can steal some money from traders. Therefore, it is always safer to wait after the news because you are likely going to be holding the trades for days. So when you want to check the news, you go to forexfactory.com and check the news to see pairs you should avoid trading for the week. As you can see on the website, there are icons on red, orange, and yellow. Yellow means low impact, orange means medium impact, and red means high impact. Out of all these news, the news identified by the red icons are news you should be looking out for when trading. These news are news that cause the market to move most times. The second thing to do is your time frame analysis or top-down analysis. And top-down analysis involves you analyzing a pair from a higher time frame to a lower time frame. We do this because price action is mostly about using history of a currency pair to judge the next move of the pair. That is price action. And to do this, you need to check support and resistance levels on higher time frames and mark them. And keep marking major levels on every time frame till you get the lowest reasonable time frame. It is important to know that top-down analysis is different for every currency pair because some currency pair move more or less volatile than others. This is why people have favorite pairs depending on their risk appetite, their capital, and their daily activities. You do not expect someone who has a full-time job to be watching gold all day, If a trader is a very busy person, he might need to trade less volatile pairs that he can be watching from time to time. So for busy traders, gold cannot even be your favorite pair at all. Moving on, the third thing to do is to mark up your charts using support and resistance levels and your trend lines, starting from the higher time frame to the lowest time frame possible. This is what is called top-down analysis. We use higher time frame to check for trend directions, and we use lower time frame to check for good entries. Finally, after doing all of that, the next thing to do is to set your alert on potential entry and check-in level. This right here is a potential entry level. This is a potential entry level. This is a potential entry level. So if we see a potential support level, the best thing to do is to click on this icon right here to set alerts on levels so that we can get notified on when a level has been reached. We are doing all of this so that we can apply our fifth strategy, which involves the chart pattern analysis, our candlesticks, and our Fibonacci analysis. Because this is where we will need to use all of these. If you remember clearly, during your price action training, you were taught chart pattern analysis, candlesticks analysis, as well as Fibonacci. When a price gets to a level, your candlestick patterns will tell you whether the price is going to break that level or the price is going to bounce on the level. This is why it's important for you to know your candlesticks pattern and also your chart patterns, so you wouldn't be in the wrong direction of a trade when the price decides to break a level. So therefore, it is not just about trading when you see a support or a resistance. Knowing how to read your candlesticks and chart patterns at this level is what makes you win more than you lose. This is why you need a mentor to guide you, so that he can help you identify these trading opportunities and also help you develop a good trading psychology. Because what we are trying to do is to develop a good trading psychology. Watching charts all the time isn't really advisable for any trader because you might panic due to the things you see on the charts. So, once you have eliminated all of this, the last thing you should do is to confirm everything with your indicator. Well, indicators are useful, but they are not so important. You are advised to use price action to do all your analysis and use indicators just for confirmation. Never ever use indicators for major analysis, or else you should be ready to lose a lot. I want you all to note that confirmation with indicators is not so necessary, and your price action is actually enough. Adding indicators to your chart just makes the chart look crowded with too much unnecessary things, really. So, I guess that's it for this video. If you have learned something new, please hit that like button and try leaving a comment under this video. Share this video to other traders you know can help them, in their trading path. And honestly, trading is really simple. If you want to find out how to make it simple for yourself, stay tuned to this channel and watch how trading is going to be done easily. Remember that we are going to be dropping weekly analysis on every currency pair before the coming week comes. So you should stay tuned and watch out for what we have to deliver on this channel. Make sure you subscribe so you wouldn't miss out. Alright guys, it's Professor Lawrence once again, and I will catch you in the next video. Peace.